Gold has gone nowhere. Real estate's gone nowhere. None of this has gone anywhere except NASDAQ and crypto, obviously, because they're both technologies that are being adopted and crypto's the big outperformer.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Dan Morehead and Raoul discuss why 2025 could be crypto's biggest year yet, highlighting factors like regulatory clarity, institutional adoption, and the integration of AI with crypto. Let's catch up with them to learn more.
Feels like 2025 is going to be one of the big ones.
For me, it's all feeling a little bit like 2017 all over again. There's a lot of similarities, and I want to hear all of your thoughts. Let's talk about 2025, because I think that's what people want to hear. You've got some views on it. There's a lot going on: politics, regulation, macro, everything. So lay it on me.
Sometimes a lot of bad things happen at the same time, and then, sometimes a lot of things are all positive at the same time. And that's what I'm feeling about right now, is that, the lack of regulatory clarity was essentially holding the industry back for a while. And we've had some big changes, like the largest ETF of all time happening a year ago. And then, the election should bring, more changes in the U.S. And, the U.S. does lead the world in, kind of regulatory, kind of feelings or the impressions that investors get. And so I think this year, having all that kind of change should be good for our market.
Bitcoin began the final week of January under pressure, dipping below the $100,000 mark as it mirrored a downturn in U.S. stock markets. The crypto giant fell by 4% to $99,256, marking a 10-day low, as market uncertainty grew amid the upcoming Federal Reserve meeting and interest rate decisions. This decline wasn't isolated. It came alongside tumbling stock futures and increased caution in risk assets. Adding to the tension, the emergence of Chinese AI startup DeepSeek created a ripple effect. DeepSeek, hailed as a serious competitor to ChatGPT, raised concerns about the future of U.S. tech dominance, prompting a sell-off in large-cap stocks. NASDAQ futures plummeted 2%, with analysts noting that U.S. tech stocks could lose $1 trillion in value. This AI-driven market turbulence spilled over into crypto markets, intensifying Bitcoin's challenges. Traders remain divided on Bitcoin's trajectory, while some, like Credible Crypto, view the dip as an opportunity to capture liquidity and stabilize. Others anticipate further declines, with predictions of a revisit to $90,000. Meanwhile, Arthur Hayes, the former BitMEX CEO, hinted at a potential $75,000 crash before a rally to $250,000 by the end of 2025. As the Federal Open Market Committee prepares to reveal its interest rate decisions, the macroeconomic landscape remains a key driver. The Fed's cautious stance on further rate cuts, amid rebounding inflation markers, leaves investors on edge. This week's data releases, including GDP and the PCE index, could shift sentiment and influence Bitcoin's path. Despite the challenges, Bitcoin's market dominance rose slightly to 58.02%, reflecting its resilience in a turbulent market. Short-term holders, however, face growing risks, with key support levels at $96,000 and $90,000 becoming critical to watch. Analysts suggest that maintaining these levels could determine whether Bitcoin's current cycle mirrors the bullish trends of previous years or succumbs to deeper corrections. The interplay of macroeconomic events and market sentiment will be crucial in shaping what's next for Bitcoin and the broader crypto space.
So I found that, our hurdle rate for assets is 8% a year for debasement, plus, let's say, 3% inflation is 11%, just as a hurdle rate, which people haven't got their heads around yet.
Yeah, and that really is the story for fixed quantity things like Bitcoin or other cryptos, is that if the governments around the world are currently debasing at 8% a year, they're probably going to have to speed up. Why be in something is being debased, right? Why not be in something that that has at least kept up with inflation, like a bunch of those things you just mentioned, like gold and S&P. Or, hey, why not get into something? Our Bitcoin fund's 11 years old. It has a 90% compound annual growth rate, right? It almost doubles every year. That's pretty good compared to -8, right? Like plus 90 versus -8. And again, investors shouldn't put 100% of their net worth into crypto, but like for the majority of institutions,
You and I have been there for a while. 100% of net worth.
no, that was probably not a good idea. And probably put a little pressure on the spouse and everything. But but if you're somebody who doesn't have any exposure yet, you really should have some to essentially hedge the risk that governments do continue to debase their currencies. If you think about currency debasement, it used to be pretty straightforward, right? When I was a kid, silver-colored money was silver, right? Like dimes and quarters were made out of silver, and now they're made out of some cheap alloy, right? And even pennies, right? Pennies used to be made out of copper. It's a 5-year criminal sentence if you melt a penny in the United States, because the intrinsic value of an old-school real penny is more than 1 cent, right? And so the government has to criminalize accessing intrinsic value there. And my favorite one is a pound sterling, right? Is, of course, used to be worth a pound of sterling silver. It costs 184 pieces of paper pound sterling to buy a pound of sterling silver. So governments are really good at debasing currencies. Unfortunately, I think they're speeding up, like all the stuff that you're talking about with deficits and paying more in interest than defense, speeding up. And so, again, that's why everyone's going to crypto. A couple 100 million people are using crypto now. 4 billion people have a smartphone, and that's all you need to operate crypto. So seems like 1 billion people will be using crypto in the next, say, 3-4 years.
Yeah, I mean, I've got my measure to get to 1 billion. I think it could be, 2 or 3 years, probably. It's reasonably fast. The other one of the macro, before we move on from that, is when you look at the rolling debasement, like 2017, the US were actually tightening the balance sheet, raising rates, and M2 was falling. So all liquidity was shrinking in the US at the time. They used the general account because of after the election and the debt ceiling. The big one in 2017 was the Chinese. And it feels like we're about to replay that exact rule book again, because the dollar's been too strong for them. They're pretty fucked. They're going through the debt deflation. They've got the aging population, slow growth. We've seen the entire rule book before, right?
Oh, yeah. No, I agree. And, China's always the unique, interesting, different thing out there. And at some point, we'll probably get around to talking about what I think is going to be an arms race to acquire Bitcoin once the U.S. has a Bitcoin strategic reserve, and China being the most interesting one because they have their entire history savings in an asset the U.S. Treasury Secretary can cancel. I mean, that's pretty wild, right? Like, they have $2 trillion in something that, if things became more adversarial, the United States could cancel. So they're going to have to take a hard look at Bitcoin as a strategic savings vehicle over U.S. Treasury notes. So that as well could put pressure on rates in the United States as foreign nations decide they need to save in something other than U.S. Treasuries.
So let's talk about that, about the Bitcoin Strategic Reserve. What format do you think it's going to be? Because we saw some noise on tape today that it might not just be Bitcoin, it might be other US crypto assets, XRP or whatever it may be, Solana.
Ethereum has started the year with a disappointing performance, falling nearly 7% in January, while much of the crypto market, including Bitcoin, remained more stable. Ethereum's price dropped from its January 1 high of $3,400 to a low of $3,170 by January 27, marking a sharp decline. Despite this lackluster start, analysts remain optimistic about Ethereum's near-term future, pointing to February and March as historically strong months for the cryptocurrency. Data shows that Ethereum has closed higher in February every year since 2018, except for a single dip that followed an extraordinary 50% January gain. Similarly, March has brought gains in 7 of the last 9 years. Last year, Ethereum surged by over 46% in February, jumping from $2,280 to $3,380, while February 2017 saw a 48% rise. Analysts and Ethereum enthusiasts remain bullish. One engineer and analyst, Wolf, described Ethereum as having one of the strongest long-term charts, calling it the best asymmetrical investment opportunity. Ethereum educator Anthony Sassano echoed this sentiment, highlighting a renewed energy within the Ethereum Foundation and its community following recent leadership changes. Currently trading around $3,183, Ethereum remains 35% below its all-time high of $4,878 in November 2021. While it has yet to mirror the gains of other top assets like Bitcoin and Solana, Ethereum's historical patterns suggest that February and March could mark a turning point, offering hope for a rebound in the weeks ahead. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.